Hello everyone. Number one, the market got slapped today, led by a big red day out of the IWM. We are seeing that the SP500 is still holding above major levels of support. We're going to see how much more room there is to fall. All right, so we're going to take a look at the S&P 500, the dollar, and the yields that are bouncing. We're going to see how much more room there is to go to the upside, and then we're going to see, how much more room there is to go to the downside. All right, so we're going to take a look at all that stuff in today's video. Make sure to like the video if you guys enjoy it, and subscribe to the channel if you're not already. All right, so without further ado, let's get started with the video. Number one, dollar had a big bounce. The dollar, it's very, very important to look at because the dollar has an inverse relationship to the market. If the dollar is rising, then the overall market is going to fall. And we were looking at how the dollar was getting to a really important. It was getting to a point where shorting the dollar made absolutely no sense. Being bearish on the dollar made 0 sense. A pop was about to come, and this is that pop. So because we had a big move like this, it caused the market to fall. So, because they have an inverse relationship. So now we can see that the dollar broke and held above major levels of prior resistance. So now we need to see if the dollar can continue up. Basically, this is a very, very important point for the dollar to remain above. We're going to keep monitoring it. But so far, this is a very strong move out of the dollar. Let's see what ends up happening. So these next 2 days in the market, Friday and Monday, are going to be very, very important. All right, so there's that for the dollar. Let's take a look at the VIX. All right, so this is a chart of the VIX. We're zoomed out on a daily chart of the VIX. And technically, this is a falling wedge on the VIX. Falling wedges are generally very, very bullish patterns. And we broke out a bit, okay? Now, it's important to look at the VIX because it has an inverse relationship to the market. So if the VIX is rising, then the overall market should be falling, okay? So when we zoom in here, basically the VIX, it looks really terrible, right? This whole setup here does not look bullish at all. It looks very, very disgusting, really bad, ugly sort of price action. But this was finally a green day because primarily it had to do with the dollar and the yields also being green. But the VIX remaining below $17 is generally bullish for the market. So if it remains below 17.50, then that is bullish for the overall market. But pragmatically, what is important to realize is that this is still in a falling wedge formation. We're still leaning towards these levels. This trend line basically is still holding as a level of support. So we need to see if we can end up falling lower and break below this trend line, essentially. And if it could, even if it could hug alongside this trend line to the downside, the VIX would still be falling lower and lower. But it's interesting that the VIX is making this pattern. But overall, the VIX does not look very, very bullish. We are pragmatically holding above 1550 as support. So 1550 is still holding as support, but we're still remaining below 1750. So that's a range that's still currently being made on the VIX. So there's that for the VIX. Let's take a look at the yields. So the yields got a lot of love today. And these are primarily, the yields in the dollar were a big reason why the market pulled back today. So the yields have an inverse relationship to the market as well. So if the yields are rising, then the overall market should also be falling. All right, so the 10-year yield, you can see that it held support at these prior levels of support and bounced. You can take a look at the 20-year, bounced pretty heavily. The 30-year also bounced very heavily. And then let's take a look at the 5-year, also bounced really heavily. So the yields starting to show some life. This, like I was saying, these were not really the times to start being bullish on the market. Up there at 436, 437, when the dollar was showing extreme weakness, when the yields were showing abnormal, like they were making legs down, right? So when the yields were, making these newer lows constantly, you can't just begin to be bearish on the overall market. You could only take so much weakness before you get a big bounce. You could see this time and time again when you're looking at the market on a 1 minute time frame, when you're scalping it, anything. When there are multiple legs down, there needs to be a bounce. So this was that bounce that we saw on the yields. This was the bounce that we saw on the dollar and on the VIX. All right, so that's a big reason why the market had a pullback today. Okay, so now we're going to take a look at what is going on with the stock market, the equities market as a whole. Okay, first up, let's take a look at the IWM, because this was the biggest loser, and it was the one of the main reasons why we had a big drop down. So the IWM was down 2.2% today. The SPY was only down 0.6%, and the NASDAQ was down only 0.35%. So the IWM falling this much is pretty crazy. So that's the weakness in the IWM. It's important to look at all the different indices together, because weakness in one tends to show on the other. So the IWM being down this low caused the SPY to also fall. So what's interesting is that, you know, on the IWM here, we came back to this trend line of the falling wedge. And right now, day to day, in the day-to-day markets, there's like intraday as well. On the smaller time frames, there are a lot of falling wedges that are appearing. So this is, you know, we came back to this very important trend line that it was acting as support. And then, you know, we could see that this is a big falling wedge on the IWM. We bounced out a bit periodically, but now we're back to this falling wedge level of support, and coincides pretty well with the 170 level on the IWM as well, which is around these lows that we had. So the 169, 170 level is going to be very important now for the IWM, but clearly this is still showing this is a really big drop to the downside. We need to see if these levels of support can hold. All right, next, let's take a look at the SP 500. So the S&P, obviously, we failed at the same 437.70 level that we were looking at yesterday, where this was a level of support and resistance dating back from July, right? So we could quickly take a look at that. You can see how this was acting as support and resistance all throughout here. And let's just go back to the initial points when it first started to act as a support and resistance back here in July of 2021. So you could see multiple times this was a very important level. And now today we failed. We were at a level of support. So we were at a level of resistance on the SPY. We were close to a level of resistance on the NASDAQ. Lots of NASDAQ stocks were at levels of resistance, or they were showing overextension. And the dollar, the VIX, and the yields were at levels of support, ready for a bounce. So everything that I just said was a reason to be a bit wary. You could not be bullish at these levels, or else you would get slapped. So you can't really be that bullish at these levels when there were so many reasons to be bearish, or at least not adding to your longs, right? So now we held above 432. We held above 433, okay? Pragmatically. We held these levels, but tomorrow and the day after, that is going to be very important, because once more people begin to be bearish, this still has a lot more room to go to the upside, in my opinion. Because this move definitely gave a lot of bears vigor again. But what's interesting is now I really think tomorrow and Monday are going to be very important. If tomorrow we have another red day, and then Monday we have another red day, this 428, 430 level is going to be very important for a bounce. And I would be very careful about being aggressively short, in my opinion. I would be very careful about needlessly trying to be short, okay? Just go short at levels of resistance. If you want to go short at levels of resistance. Don't start going short when we see weakness like this right now, only because we had an extreme amount of buyers in these past few days. Okay, there are a lot of buyers that have stepped into the market, that have, you saw the amount of exuberance to the upside over the past few days intraday. This is not a time where all of those buyers are just going to vanish. They're still here. They bought up. They're not going to sell unless we really, really fall. And I don't see that really happening yet. So because, again, guys, seasonality wise, the end of October, we end up rising really, really hard. So I'd be careful. I'd be really careful about going extremely short. And I really think tomorrow and Monday, this 428, 430 area is going to be really nice for a potential dip buying opportunity. But who knows if we even get there. But that's my thought process for that. Now I'm going to take a look at the NASDAQ and the large tech stocks, because those were another big reason why I thought we were going to have a pullback. So the NASDAQ, we saw that we were getting very close to this trend line, this level of resistance here from back in July. And, you know, clearly we were getting very close to it. So that's one reason. NASDAQ was getting very close to a level of resistance. The other reason is that a lot of these large tech stocks were getting very overextended to the upside, or they were also starting to show weakness. Starting with Meta. So Meta was getting very overextended to the upside. Multiple opens and close outside of the upper level of the Bollinger Bands. And we already know what that means, is that we should get a reversal back inside of the Bollinger Bands. So this was supposed to be bearish. This was not, the strength out of Meta was not going to sustain itself. So there's that for Meta, right? Clearly there was some weakness. Now let's just go down the list of all the large tech stocks. I was showing how Google was getting very overextended to the upside. We needed to have some sort of a pullback, and it made sense to get this pullback. This was the biggest leader out of the AI stocks. This was the biggest reason why Google, Nvidia, and AMD were the biggest reasons why the market bounced. And, you know, after a big move like this to the upside, having a red day is fair. And yesterday's green candle, it became way too overextended. So this was a nice little move to the downside out of Google. Makes sense why it happened. We can take a look at Apple. Apple, this was also, you know, we saw like a wick. This doesn't look as bearish. It wasn't a red candle, but this upper wick doesn't really help. But we see that the Bollinger Bands on Apple here are pointed upwards. So there's still a lot more room to go to the upside in terms of being overextended. So, you know, it could just continue to rise without it being opening and closing outside the bands. So Apple still seems like it has more room to go to the upside, but then Tesla showed some weakness. So Tesla was showing weakness. Made sense. We had a big wick to the upside, some sellers. Makes sense. All right. These stocks were not going to just rise continuously for, you know, forever, right? So there needed to be a bit of a pullback. Now we can take a look at the winners. Nvidia looks very similar to Apple, and Nvidia was getting very close to the upper level of the Bollinger Band yesterday. So that is something a bit bearish, but once again, you know, like it's pointed upwards. So it's not as if it's going to become algorithmically overextended like Meta was. So Meta, what I mean by this is that Meta, the Bollinger Bands, while it was making all these moves, the Bollinger Bands were still relatively tight and they were barely moving to the upside. Okay, so while the Bollinger Bands were barely moving to the upside like this, Meta was able to make huge moves and close outside of the Bollinger Bands, like clearly very far away from it. And then the next day, the Bollinger Bands would be over here. Meta would close and open over here. So that's currently not the case with Apple and Nvidia at the moment, because the Bollinger Bands are pointed upwards. So that's basically what I mean by it's not going to get as algorithmically overextended. We could just continue rising. But Nvidia did have a big wick. This is not the most bullish setup on Nvidia. Obviously, this was not a bullish day overall. So it makes sense why we had some sort of an indecision candle here. At the top, we had a big move to the upside. Makes sense to get some sort of weakness here while the rest of the market is weak. All right, AMD, same concept, big wick, failed to cross above yesterday's highs and wicked above. Clearly not a really bullish setup. Microsoft, same concept. Amazon, same concept. Netflix, garbage, same concept. And yeah, you know, it's the large tech stocks. You needed a bit of a dip. The winners, Google, Nvidia, AMD, you needed a bit of weakness right now, and that's completely fine. Now going back to the NASDAQ, the level that still needs to hold in the NASDAQ. So the NASDAQ is leading. Even when the rest of the market was showing a lot of weakness, the NASDAQ was still holding support. It was still doing well. So this 368 level on the NASDAQ is going to be really, really important. And I want to see how much this can essentially hold now. So the other thing that needs to be taken into consideration is this upper Bollinger Band is starting to clamp down and is starting to point lower, which means that we could potentially start to get algorithmically overextended soon. So the upside is starting to get a bit worrisome, because big moves to the upside are going to start getting algorithmically overextended. Because we can see on the NASDAQ, the Bollinger Bands are pointed lower. Whereas on Nvidia or Apple, the Bollinger Bands are pointed upwards. When they're pointed upwards, that means that there's more room to go. When they're pointed downwards like this, that's a bit more worrisome. So it's going to be fun to see. It's going to be very, very fun to see what happens in the next few days. I truly think tomorrow, Monday, is going to be really, really important. I'd be interested to see if we get so 433 is the first level of support, then 430 to 431, and then below that is 428. So I'd be very interested to see which level holds and where we get a big send off from. So the most bullish would be obviously if we don't break below 433, if we don't close below 433, and instead we just bounce. So I'm seeing, let's see if that ends up happening. But the big move out of the dollar and the big move out of the yields are something to take into consideration. But, let's see if this was just a huge bear trap. And the most important thing is that there are still a lot of buyers in the market. Today felt very deflated, obviously, as like big sell-off and everything, but the fact that the market was still able to hold, not drop as dramatically after hot CPI data, not really hot CPI data, but it came in hotter than expected. Let's see where the market goes. All right, so I hope you guys enjoyed today's video. Once again, please make sure to like, comment, subscribe, and I'll see you guys bright and early tomorrow morning. Thank you.